how to make money in bear market. It's so easy to make money in bull market. How do we prepare ourselves for bear market and still make money in bear market?
So I actually make more money by a long way in bear markets. So bear markets for macro people tend to be very interesting. So if you think about a bull market, they tend to be long, and let's say they go up 10% a year. Okay, or 15% a year, something like that. That takes a long time. Bear markets, you probably get a 50% return in a 6-month period.
Yeah.
So with the ability to use futures or options, particularly options, you can take hugely leveraged bets in a very fast moving market where the markets have underpriced this risk. So that is where, when you're looking at the indicators, particularly around recessions, it's hard around geopolitical events and stuff because they tend to be more randomized, but recessions tend to be forecastable. So there is a secret here. There are two types of drawdowns that you get. You get corrections and you get economic bear markets.
Okay.
Right now, across the world, we've been seeing markets sell off. Well, if we go back to my framework, the ISM is still positive. Global growth is still positive. Yes, it's rolling over. Yes, the yield curve's coming, but none of the economic signals are there.
Okay.
So really, you have to be quite lucky to capture those events.
Yeah. And
I would say I probably get, it's a very 50-50 hit rate, maybe less.
Okay.
Of those kind of corrections you can spot. They tend to be technical analysis, but you often have many false starts, and then finally it happens, and they're not great. If you get the other one, which is all the economic signals stack up, then I have 100% hit rate.
Sure.
No, that 100% would be fair. I'm always early. So give me, maybe get stopped out once, give it a go once, maybe even a second time, but the third time you make all the returns. So you might, lose 2%, lose 3%, make 30, 40%. It's thinking of the risk returns. So it's happening everywhere. So if you need to understand how the crypto space is.
Yeah.
These cryptocurrencies like Bitcoin, particularly Ethereum and others, Solana, AVAX, Luna, these are the blockchains on which the applications are built.
Okay.
They're not the applications themselves, but they are networks, blockchain networks, that if we buy the token, we're participating in the network. So if you imagine that Facebook, the network owners are the people who own the shares. We as users of WhatsApp or Facebook, we just get the utility, but we don't get any value.
Right.
This new world of cryptocurrencies, users have a token, so it goes up in value. So everybody's a participant, an economic participant in the network. But that's that, they're called layer ones. After that is the applications layer. So the first thing that really came out was decentralized finance.
Yeah.
So again, to equate it to the Indian world, this is fintech, but fintech that's not being done by the banks or a small startup. It's fintech that is decentralized in nature. So algorithms, matching flows and creating yields and all sorts of incredible stuff that just happens via algorithms. This is basically the yields, the borrowing and lending layer, that fintech layer. So that's building massively. So that's our banking system, where I can now have my crypto, I can get paid a 5% interest, or I can lend it to you, I can do other things with it, or I can swap it for something else. All of the functions the banks provide us, but there's no middleman, we're not paying the bank. The next big thing that came out last year was non-fungible tokens, NFTs.
Yeah.
This, at first, people don't understand, because it's like, well, people are trading pictures, digital pictures, and they're going for millions of dollars. This is ridiculous. Yes and no. What this is is a non-fungible token versus a fungible token. A fungible token is one Bitcoin is the same as another Bitcoin, but there's a finite supply.
Okay.
Those Bitcoins are the network layer, or let's say Ethereum, it's a better example. Ethereum's the network layer. On top of that, on this chain that records everything, distributed, so there is always one source of truth, which is all of the nodes on the network confirm that what's in that block is correct. So on top of that, you can have a non-fungible token. What that is it's a unique token for a unique contract. That allows you to put a very individual thing. So let's say you're a famous digital artist. You can now create scarcity by saying, well, I'm going to make an NFT of my art. So this is exactly the same as you can have a set of limited edition prints, or you can have the original. So, or you can have the image you've just taken off Google because you want to have it as your screensaver. The one that has value is the original, and then the next value is the scarce supply limited edition prints. So that's what you're doing here, but there's no middlemen, because now you can start selling art to people. But it gets a lot bigger than this.
Yeah.
So property can be attached to the blockchain now. So think of the mess that is Bombay property by some of the title deeds that are owned by 28 families, and all of this issue of redeveloping. None of that has to happen. If you think of a property transaction as well, you need a notary to confirm the two parties have made this agreement that needs to be lodged.
Yep.
Within that, as you know, there's bribery and corruption that takes place. There's difference of prices. There's all of these things. And then when I want to buy that property, because you just bought it, I want to buy it from you. Do I know your title deeds? Who really owns it? All of these things are complicated. If you put property on a blockchain, it's all confirmed. All the legal contract, it's essentially notarized by every participant on the chain. So it means that we have trust. We need trusted things. We don't want to go to the notary every time and then get 3 lawyers involved and then go to the bank. We want it all to be trusted instantaneously, which is kind of like India's stack, right? So now you can do your KYC instantaneously. Well, imagine if the whole world does that on blockchain, then everything is interoperable. We can do this all together. And NFTs are unleashing all sorts of things we don't know. Just think of every contract. So insurance will go onto NFTs because you have these new, and then we can sell insurance and buy insurance and trade insurance, all sorts of things. It's like the derivative market's clearly going to go onto blockchain because it's a much better way of keeping track of who owns what and all of these things. And same with the credit markets as well. So there's a lot, and it's only just started, and we're going to see even more developments coming in all of these things. You're owning a piece of the 21 million Bitcoins that make up the final full network. So if the network has value, this is called Metcalfe's law. So Metcalfe's law is how you think about networks. So if you think about, I'll relate it to Reliance in a sec. If you think about Ethereum as a network or Bitcoin, you have the people who buy it, the owners of the network. So people who are trading it, whatever, they own a piece of the network. But the network to be really valuable, you want people to build applications and connect all of these people together. So if you relate it back to Reliance, so if we think what Ambani first did, which was he took over the entire mobile phone market, but started at 3G or 4G.
Yeah.
So that put everybody else out of business. So what he did was make data free, essentially. So he's now got a network, but we haven't created value in the network yet. So normally you would have gone bankrupt. But what he then did is raised $10 billion from Google, Facebook, and everybody else, and said, right, I'm going to build all the applications layer, the shopping, the online shopping, all of the uses of his network. So then now he owns the network and he owns the application layer. That is incredibly valuable.